Let's talk today for a while about how governments can and should deal with recessions. This is an important question right now. The unemployment rate is skyrocketing. More than 20 million people, 24, 23 million people have lost their jobs in the last 5 weeks. We learned today that GDP was down almost 5% in the first quarter of the year. We are seeing some ideas that second quarter GDP could be down as much as 20% or even more. So we have a serious situation here, recession, depression, and we need to think about what are the options for what governments can do? What has Trump done? And is he doing a good job or isn't he doing a good job? And what I want to suggest to you today is that given the circumstances, Donald Trump has actually used most of the correct measures that are available under the paradigm of Keynesian economics to deal with a recession, but he's done it in a completely incompetent, crony, and slow way. And these are policies that are direct contradictions to what Republicans claim are the policies that a government should institute. So there's also an element of hypocrisy, but we'll get to that. So to start with, governments have two major sets of sort of tools at their disposal: monetary policy and fiscal policy. And very simply, when we say fiscal policy, we mean government spending to influence the economy. And when we say monetary policy, we're talking about treasury management. In our case, it's whoever manages the currency, treasury management of the money supply and of interest rates. So fiscal policy would include things like spending on infrastructure during a recession to create jobs, hire businesses to fix bridges. The businesses pay those employees that are doing the work. Those employees then go and spend that money in the economy, helping the grocery store and the landscaping company then hire, and they hire, and so on and so forth. So that's fiscal policy. Then you've got monetary policy. Monetary policy would be, for example, cutting interest rates to encourage loans, making loans cheaper so that people will go and borrow money with which they can pay for expenses, buy things, maybe pay employees, etc. When coronavirus hits, businesses start to close, people stop traveling, a bunch of things happen without government intervention that aren't good. This increases unemployment naturally. There's a demand collapse. People stop going to restaurants, so the restaurant no longer needs their workers, so they lay them off, which means the restaurant owner isn't making any money. They can't pay their rent, or maybe they can't pay their utilities, so that affects their landlord. The restaurant doesn't have customers, so it doesn't need to buy food. So they stop spending with the food supplier. The food supplier doesn't need to buy as much stuff from farmers. The farmers no longer need as many employees. I think you can sort of understand that. Now, the food example is a more interesting one because you see a demand reduction at restaurants, but an increase at grocery stores. But as we've learned with toilet paper, oftentimes the personal and commercial supply chains for some of these goods are separate. So that's sort of a detail, but I think you generally understand the idea here. The other thing that can happen in a recession is that you get a deflationary spiral. So in the same way that if everybody wants hand sanitizer, the price of sanitizer gets driven up, 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 which we saw about 7, 8 weeks ago. If, for example, nobody's driving around, this leads to a drop in oil and gasoline prices, which we've seen. Now, we may not care that much about oil prices being low. It sounds intuitive that lower prices are just good, right? I mean, if we're in a recession and stuff costs less, that's good. It means people can afford more of it. The problem is that it can cause more unemployment. If you run a business and suddenly not only do people want less of your stuff, but you have to lower the price because people aren't willing to pay as much for it, that furthers not being able to keep employees on. So you lay people off, which means they don't have money to buy stuff, which means the deflation continues. That's why it's called a spiral. In a healthy economy, you might see some deflation because we get better at making something. So if we become much more efficient at making a particular product, we lower our cost to make each one of those items. And as companies compete with each other, whoever can increase productivity and lower costs can maybe gain more market share. So that's okay. That's a good example of prices coming down, deflation. Deflationary spirals in a recession aren't good. So let's now look at the things Donald Trump has done, or things that have been done, if not by Donald Trump personally. So the Fed cut interest rates. Great. That's monetary policy. That's the right thing to do. The Treasury has created these PPP programs, Paycheck Protection Plan programs, where the interest rate is effectively negative. You get money, and as long as you use it for the right things, the loan doesn't have to be paid back in full. That's the correct thing to do. Now, the problem is they did it in the crony capitalist way that Trump always seems to do. It took too long. There were all sorts of logistical failures. The system didn't actually start distributing money for a month or longer. Money ran out too quickly. A lot of the money went to really large corporations and other institutions instead of small businesses. Small businesses ended up not being able to get money. Trump has to scramble, ask for more money, and ask for money back. Total disaster in its implementation. But it is policy that makes sense. Now, there's a practical way in which PPP is kind of a blend of monetary and fiscal policy. It's sort of like low interest loans, which is monetary, but forgivable loans to business are sort of like government spending, which is fiscal policy, but that's kind of a detail in terminology. Another important monetary policy component is expectations management. This is part of why, remember we talked last week or the week before, we get bad unemployment news, and yet the stock market sometimes goes up. What's going on? Managing expectations is part of monetary policy. You tell the public in advance what you expect to see happen so that it more smooth, this is the goal, right? It more smoothly gets priced into the markets. And then when the news hits, it's not a shock to the system because the markets were expecting it anyway. That is a form of monetary policy, expectations management. So let's now talk about fiscal stimulus. You can do fiscal stimulus by cutting taxes. So when Trump proposed, it didn't happen, but Trump proposed, what if we do a waiver or a moratorium on the payroll tax until the end of the year? That would be a form of fiscal stimulus through a tax cut. You can also do fiscal stimulus by the government spending money. This can be buying things. This can be hiring companies to do stuff. It can also be just the government sending people checks. Could be a one-time payment, which we've seen could be by increasing unemployment benefits. What we're talking about is deficit spending. There are sort of people on the right who like to cartoonify this as printing money. We talked last week with Stephanie Kelton about that. Calling it printing money is not really an accurate term. What we're talking about is deficit spending. We're talking about digitally adding money to people's accounts. Now, again, Trump is doing this. He's boosting unemployment benefits. That's fiscal policy. It's getting money to people, which people can then spend, increasing aggregate demand, maintain prices relatively level, more level than they otherwise would be. When Trump cuts $1,200 checks, or really the Treasury does, that's fiscal policy. It's government spending. Now, they also sent billions to some industries, airlines, cruise companies. That's also fiscal stimulus. And it is the right tool, but the problem has been, again, implementation. Took way too long, not nearly enough money for the average individual. A ton of the spending was done with companies that really shouldn't be the priority, should have been more money for individuals. We heard last week from billionaire investor Chamath Palihapitiya, who said that, some of the companies being bailed out, these are really bailing out. These are bailouts of the billionaires who are speculating, not the employees. If you really want to bail out employees, you can do it in a much more direct way. In addition, Trump has done it in a completely crony capitalist way. He's reduced oversight, which has turned some of these bailout funds into essentially slush funds. He's used government money to buy things like ventilators and PPE. That's stimulus, except there's always something weird when Trump does it, like the company that is bankrupt with no employees, which has gotten a big contract to essentially just middleman the purchase of a bunch of masks way above market value. So it's the right tool. It's being done in a crony capitalist way. The focus is often wrong. It took forever. Millions have still gotten nothing. The unemployment insurance supplements have still not been received by a lot of people. So in short, Donald Trump has used the right tools under the Keynesian paradigm, and I'll talk more about that in a second. fiscal policy, monetary policy, but he's done it in an incompetent way. And it of course, massive hypocrisy, because what we hear from the right year in and year out is, one, we don't have the money for this. That's clearly untrue. We found it, right? And it's not really finding it. That's a misnomer, but we were able to do it despite Republicans saying it's not possible. So there's the hypocrisy element. And number two, you often hear Republicans saying that these types of techniques don't actually work, and yet here they are saying, hey, we've actually got to do it. So incompetence and hypocrisy, but the right tools have been used. Now, what hasn't Trump done that he could have done? Infrastructure spending. Trump has talked about doing infrastructure spending. It would be important to do 6 solid months of infrastructure spending. So have the government spend on fixing roads, bridges, tunnels. The electric grid could be bolstered. Water supply could be better protected. There's tons of things that could be done. They would boost employment. They would inject money. And when we come out of this, whenever it is, we would be better prepared. We would have better infrastructure to resume all of that economic activity. It's not been done. It's time to do it. Trump should have already gotten this going. He talks maybe it'll happen in the next phase. We don't know. That certainly has been a mistake. Now let's zoom out from all of this. Why? Everything I've been talking about, these fiscal policy tools, these are what we call Keynesian tools. They're from the school of fiscal policy founder John Maynard Keynes. Our government has these tools available instead of other tools because Keynesian economics are sort of the orthodoxy. And this is based on, you see a recession fundamentally as a demand shortage, and you then take these reactions of fiscal policy that we've described. That is not the only way to see the role of government before and during a recession or a depression. A more progressive economic worldview would say, all right, David, you've accurately described the Keynesian tools, but those tools are not proactive. They are reactive. So I'll give you some examples of what a more progressive, proactive perspective would be. A more progressive economic perspective would say, the federal government should always be bolstering state unemployment insurance. So if they did that all along and people got more money from unemployment insurance, if more money was available at the state level, then you wouldn't see this panicked scramble to do it now. But you wouldn't see the decrease in demand that you are seeing now because people don't have money. Another perspective, the federal government should always be funding more education and other government jobs so that when you have a recession, a lot of those jobs just continue and you avoid having to bail out as many companies with loans. You avoid having to send as many people $1,200 checks because a lot of these government jobs, including in education, can simply continue. Now, that's a political perspective that right-wingers often disagree with. Others would say if we had permanent universal basic income, we would obviate the need for as much of this desperate spending because people would already be getting that baseline income from the government, and thus this pandemic recession would be less of an emergency. It would still be one, but it would be less of an emergency. If we had, here we go now, government-run healthcare, you wouldn't need Trump negotiating with insurance companies to waive copays on coronavirus testing or treatment. It would simply be done because the government is more involved in healthcare. So that exceeds our time today. But the seed I'm planting is Trump has used the right tools given the system we have. He's used them incompetently, but there are more progressive economic perspectives which would say if we had much more government involvement all along in employment, in fiscal policy, all the time, it would prevent as much of an emergency need for that to be done right now. Many people don't want more government involvement, and that's a political debate. So I hope that this is useful to people. There's been a clamoring for more policy stuff like this. I'll produce what the people want. Let me know. Let me know your thoughts on this particular segment on Twitter @dpakman. Privacy.com is one of our sponsors, and they're giving you $5 just for using their free service at privacy.com/Pakman. Privacy is a service I've been using for a while now. I love it. It saves me a bunch of headaches. It's completely free, and it's very quick to set up. And here's how it works. When you pay for something online or over the phone, Instead of exposing your real credit card number, privacy lets you generate virtual card numbers. The payments are withdrawn from your checking account, but your real card number stays completely private, and you do it all with one click. You can autofill the card number in your web browser, on the phone. You can create 12 virtual cards a month. You can set spending limits, freeze them, delete them whenever you want. I especially love it for free trials where you need to give a credit card number, because I can destroy the virtual card number as soon as I give it to the company, and I know I won't be charged in the future. If you're ordering food over the phone, why do I need to give a restaurant my real card number if I don't have to? Companies don't have to know who you are. Your real credit card number is protected from the data breaches that happen, unfortunately, more often than we would like, and it's completely free. They do have a paid version with different tiers where you can create more virtual credit card numbers per month, cashback rewards, extra security features. But go ahead and sign up for the free service. It's a no-brainer. Companies can't charge you unexpectedly. You're protected from identity theft. It costs you nothing. And privacy is giving you $5 to spend just for signing up when you go to privacy.com/Pakman.